Hey guys, welcome to AI Trading Live. I hope you guys are all having a great day today, and I hope the day is treating you very well. Welcome to our session here with AI Trading Live. Let me share my screen and let's get this thing kicked off so we can see what we can get done today. Awesome, very cool. All right, so welcome to AI Trading Live with myself, Robert Grzesik. Before we get started, let me tell you a little bit about myself so you kind of know where this is all coming from. So first of all, I've been a programmer for over 25 years. I have a master's of finance degree, so have a little bit of education in this space as well. I've sold multiple tech companies, including ones that I sold just coming out of college, out of my master's degree. I worked on Wall Street for a number of years, doing things like mortgage finance, a bunch of other things. I created a company called Voyager. For those of you that are in the crypto space, I was employee number 4 or number 5 at Voyager, which basically was a Coinbase competitor that we were able to grow quite large. We actually were sponsoring NBA teams at one point in time. It was pretty cool. We got to be worth about $1 billion on the stock market. Company grew quite substantially until about the time when FTX collapsed and basically took us down with it. All right, so went from 0 to $1 billion, then right back down to 0. But definitely a very fun ride, and learned a lot building out that company, and I learned a lot about crypto and all the bunch of different things actually. And now I'm the CEO of Lumiwealth Spot, where what we do is we use AI to help you with your trading, to help you hopefully make a lot more money and be more successful and take less risks. All right. For those of you that are new to this AI Trading Live, this is our agenda. This is what we do every week. Basically, first of all, we see the existing bots performance. We see how we've been doing with the bots that we've been running. We plan out new bots or changes to existing bots, and then we build or modify bots using AI, and then we see the results, and hopefully we make ourselves some good money. I'm going to be using my own real money in these robots here. So you'll be actually see not just with fake money, not anything like that. We're actually gonna be using real money to trade unless I say otherwise. Okay. Of course, here's our disclaimer. This is all educational and informational purposes only. These are not recommendations. Please don't take anything that I say as a recommendation to buy or sell anything or invest into anything. I'm not a financial advisor and don't really want to be quite honest with you. This is me trading my own money with my own opinions. I have my own opinions about how to trade and what to invest into and all that, but it's to trade my own money, not to trade yours. If you do need some help with trading or investing, please contact a financial advisor. And yeah, please read this disclaimer. All right. And of course, if you guys want to try this yourself, if you guys want to use BotSpot yourself, you can go to www.botspot.trade and you can basically do everything that I'm doing here today. This is all going to be going through the BotSpot website, so you'll be able to see what is going on. All right, awesome. Without further ado, let's get this show on the road here. I'm checking our messages. We do have the ability for you guys to message us live. So the reason why we make this live is because we want you to be able to actually ask us questions and discuss things. So if you want to talk or if you have a question or anything in mind, please use the comments. Please use the comments. Please use the chat window. It's on YouTube and you guys can actually see that. Let me show you how that looks actually. So if we go to youtube.com, and if you guys are not following us on YouTube yet, please make sure that you like and subscribe, because we do put out a lot of videos like this, and you guys can get a lot of free content and you'll see basically what we've been up to. All right, so if you're subscribed to our Lumiwealth channel, right, so search us Lumiwealth. Right, this is our channel right here. I'm going to share this into the link, although funny enough is if you're looking at this live, you're probably already on our YouTube channel, but in case you're not, make sure you go here and click the subscribe button so that when we do this in the future, you're actually going to get a notification. You'll get a notification right on your phone whenever this is being done so that you can get a chance to actually listen and follow along and ask questions and all that good stuff. Right, and here's our live session right down here. Okay, awesome. How are all of you guys doing today? Hope you're all doing very well. Feel free to type into the comments or the chat. And let's do it. So let's go to BotSpot. We're actually getting ready to do a very big upgrade that I actually want to show you guys today. It's really, really impressive new technology that we're working on. It's not finished yet, but I could show you a little demo today if things go according to plan. And we're hoping to release this new feature hopefully by the end of the week. We're hoping to have this actually out on Sunday if everything goes according to plan. Really, really cool new feature. We'll share that with you in a bit. But let's start off with looking at my bots and seeing how they're doing. The whole market's been just getting crushed lately, so I have a feeling that a lot of these are down. But let's check. Let's see how we're doing. So we ran this Condor Martingale. We're running this TQQQ SMA. We're running this Palantir spread strategy. Palantir is down a lot, so I can imagine that's probably getting crushed right now. And then I want to take a look at one of the bots we've been running for some time now. Okay, so let's take a look at this one. We were running this weekly momentum option strategy. Last time that we had this session, we started this thing up. And yes, it did get hit pretty hard. That actually makes a lot of sense. The whole market's down, especially most of these really risky stocks. And this actually owns options on those stocks. So it makes a lot of sense. So it's down 18%. That is actually not very surprising, right? We have another one here. We have our options Condor Martingale. This one, something happened to it. This is just fake money. We didn't use real money in this one. So something happened with this account. So we could actually investigate this if we want to get an Iron Condor strategy working. This one took a hit. It's something that we were just testing last time, though. It's not real money here. So I'm not too concerned about it, but it says something that we need to investigate. Here's a real money portfolio. This one's actually still doing quite well. So this one, if you guys remember, if you've been investing with us or watching this for some time, this is one that we ran on September 24th. This is actually real money in here. And I'm still actually up quite a bit. I'm up 4.7% despite the market blowing up, which is quite nice actually. All right, so here is our portfolio value. We started at around $2,069, and that went all the way up to now $2,172. So we're actually still up a good amount, a good chunk of change. We're up 4.7%, still beating the stock market, which is quite nice. Right, so this one is actually one of my favorite algorithms, doing quite well. Right, then we have our Palantir bull spread strategy. This one also took a hit. Makes sense. Palantir is down a lot right now. And then we have our TQQQ SMA strategy. This one's been running for quite some time. I think this one's just paper money. Yeah, it is. This one's just paper money, but running that same strategy over a longer time period. Still doing very, very well. Look at this. We're up 12% despite the market downturn. Still doing quite well. Okay, so we see where we're at. We have a couple of strategies over there. So question is, what do we want to do going forward? I have a couple of accounts here. I'm going to log into my Tradier account. If you guys are not using Tradier, you should check them out. We actually got into an agreement with them where we're going to be able to give you a free membership if you guys use Tradier. So that is going to be going live at some time soon as well. And they actually have a new website. There you go. Okay, so here is that account that we've been using to oh, it actually just placed a trade today too. Okay, so this is our weekly momentum bot, which is down, which makes sense. Again, the whole market has just been crushed lately. So we had CCJ, we owned that, and then now we bought HIMS. And that's what we're going to be doing going forward. I want to actually check this account to see if it's trading what it's supposed to be. So I'm going to actually view this. So here is CCJ. So what it should have done, yeah, it bought on October 30th, right? This it sold HIMS. Let's see what exactly happened here. We have quantity. So it bought one of each on October 30th. And then now it bought, or it sold HIMS actually today on, no, not today. It sold on November 6th, right? And then this is all according to date. Yeah, this is all sorted according to date. Okay. So, yeah, so it looks like it bought HIMS and CCJ on October 30th. It sold some HIMS on November 6th, but it did not sell the other one. It did not sell CCJ. So there's something actually wrong with this strategy. So I would actually like to investigate that to figure out what the heck is going on with this thing. Why is it not selling these things? We got into that last time, and it still doesn't seem to be working properly. Still seems to be actually not selling things correctly. So what I could show you guys actually, let's see if I could get this working here. So if I go into this strategy, I'll go botspot.trade slash AI agent. This is our new AI agent that we're working on. We haven't made this. I mean, this is public if you guys want to mess around with it, but it's not fully working yet. So that's why we don't actually have a link to it on the website. You have to go directly to it. But this is actually kind of a cool thing that we're working on. This is our new feature that's, I think, going to blow people's minds when you actually realize how powerful this thing is. It's not done yet, so you don't have the full thing, but let me show you a little demo here. So here is, we're looking at, what's the name of this strategy again? The name of the strategy is Weekly Momentum Option Strategy. Weekly Momentum Option Strategy. There you go. So we got into this thing here. So for some reason, we are having, or for some reason, this strategy is not selling. Is not selling its options. It bought two different calls on October 30th, then sold one on November 6th, but did not sell the other one. Why? And then also, it should have, also, it is currently November 13th and should have sold CCJ as well, but did not. Why? And then what I'm going to do, and this is going to be more automatic actually in the future, right? Like I said, we're going to add basically this feature in here where you can actually talk to it and it'll be able to. So basically the way that this feature works is it actually can go and look at the strategy. It's able to inspect the strategy code, go through the code and say, hey, this is how the code works. This is what's happening here. And the AI is actually able to pick this up, which is really damn cool. What we're planning on doing as well, and like I said, we're hoping to launch this on Sunday. That's going to be fully operational, where it could actually read through back tests and read through deployments. And I'll be able to actually ask it, what happened here? Right now, it's just going through the code. By Sunday, we should have this thing live where it could actually check the deployment that is running and read the logs and say, hey, this is what's going on here. We're hoping to have that feature live by Sunday, which is going to be really damn cool and be very useful in this situation. But even this is useful because it's able to read through the code and still tell us what's going on. So here's what a return back says. The strategy has a parameter expiry close days set to 7. This means that if an option has 7 days or less until expiration, it will be automatically sold. For HIMS call option bought, it was sold November 6th. It means it was held for 7 days. The strategy logic for selling is take profit, time-based exit. If the option is held for 1 week, it will be sold. Expiry close. If the option has 7 days or less until expiration, it will be closed. It seems HIM's option was sold due to the 7-day holding period, which is good. Regarding CCJ options, bought on October 30th and not sold until November 13th. It was not sold on the November 13th, actually. This is likely because it has not yet met the criterion, which doesn't make any sense. So, okay, so this is actually quite useful. It's telling me some stuff here. What I'm going to do is I'm going to go over to our bot builder. I'm going to go over to our AI and I'm going to tell it this thing is not trading. So I'm going to go back here. I'm going to go over to our edit strategy thing here. And I'm going to tell it, I'm going to say exactly what I told this other AI. This AI doesn't have the ability yet to trade or to actually modify the strategy. We're going to have, again, on Sunday, what we'll be able to do is we'll be able to talk to this AI. We'll be able to say, look at the deployment, what happened, analyze the logs, and then we'll be able to say, make the change, improve the strategy so that it doesn't make this mistake anymore. But right now, I kind of have to do both of them together, right? So I'm going to use one AI to do a little bit of sleuthing, and I'm going to use the other AI to actually modify. So I'm going to say, so CCJ is still being held, even though it's been longer than 2 weeks. CCJ should have been sold a week ago, but was not. Why? We should not. Maybe what it was, this is actually possible. Maybe, is it possible that it was simply chosen again? But that actually shouldn't be the case. It shouldn't, but that probably shouldn't be the case because we should have at least rolled the option to a further expiration. However, I think there is something actually broken about the sell mechanism because it should have sold CCJ both a week ago and today, but neither happened, and we still own it. Should we add more logs around this too so that we better understand exactly what is happening in the future? Please fix this issue so that it actually sells after holding it for longer than a week. And what the heck? Something strange happened there. After holding it for longer than a week. And make sure we have a lot of logs around anything to do with what we are holding / selling and why. Okay, so there we go. I'm going to get the AI to work on that. There's definitely some strange stuff going on here, and it's actually analyzing the backtest logs for me. The deployment logs are actually getting analyzed, so that's really cool. What I'm actually going to do here, and like I mentioned, this is all going to be available to you guys very shortly. You're going to have an AI that's going to be incredible around this. where you'll be able to just like literally talk to the deployment logs and say, what happened here? But right now, I'm just going to actually look at our logs here because we don't currently have the feature yet to do that in the AI. So I'm just going to rely on our logs here so I can see what is going on, what happened and why. So let's give it a little bit of time. This AI is just working now. So we got back, it analyzed, there we go, received logs analysis. Perfect. So one of these is going to be a logs analysis from the back test. Another one's going to be a logs analysis from the deployment. Okay, so the provide logs do not contain. Okay, the strategy is failing to sell CCJ. Let's see, I think this is it. Because of a critical bug in the manage exits function. When a sell to close order fails to submit, example, due to an issue with a broker market conditions, the strategy still removes the option from internal tracking. This causes the strategy to forget about the position and never attempt to sell it again, even if it remains open in the brokerage account. For a CCJ option, it was bought on October 30th, 2025. On November 6th, 7 days later, the manage exits function should have triggered a sale due to the hold weeks 1 rule. The HIMS option, also bought on October 30th, was successfully sold on November 6th due to hitting its stop loss as implied in the transaction history, confirming that managed exit did run and process positions. However, for CCJ, it appears the sell to close order either failed to submit or was canceled, but the position was incorrectly removed from something. This, okay, there it is. Okay, incorrectly removed. Oh. It's not possible. It's simply okay. It's not possible that CCJ is simply chosen again. Let me actually copy this over. I'm going to copy this over to a notepad so I can read this a little bit easier. Okay. It's not possible that CCJ was simply chosen again for a new buy as the has open option on underlying check, which queries your current broker positions would correctly detect the existing open position and block a duplicate purchase. Yes. Okay. So key log patterns. All right. Root cause analysis. Okay. Recommendations. Correct exit handling. Modify managed exit to only remove a position from self-vars if the sell to close order was successfully submitted. This ensures the strategy reattempts to exit the position on subsequent iterations if the order initially failed. And then enhance exit logging, add detailed logging within the managed exit to provide complete visibility into the decision-making process. And then investigate get cash anomaly. Look at why self.get cash is returning a significantly lower value than the back-tested budget. That's actually not correct. That's fine. Okay, so we have the AI working on this. It sounds like it actually understands what the issue is here, and it is currently working on generating a new strategy that should fix this issue. All right, so we're getting that all fixed here. It's going to be so much easier when we have this new AI. So what I'm actually going to do is I'm going to take this. So I'm going to say no, CCJ was never sold, not even on November 13th. It is November 13th today, and we still own it. Okay, so what I'm going to say this thing, I got another AI to analyze the deployment logs, and this is what it said. Do you agree? All right, I'm going to send that over to the AI. It's actually very cool. You can like talk to the strategy. I agree with the AI's analysis. The core appears to be a bug and manage exits function where an option is removed from the strategy internal tracking, even when sell to close order fails to submit. This prevents the strategy from reattempting this to sell the option. The AI's recommendations are sound, correct exit handling, modify this to only remove the option from internal tracking if the sell order is successful, and enhance exit logging. Yeah. Are you sure that this is enough, though? Is there maybe there's some sort of bug in the way that it's actually trying to sell it? Maybe it tried to sell it and it didn't work. What do you think? Do you have any other suggestions on how we can make this thing really foolproof? This AI is actually very cool to be able to talk to it like this. It's going to be so amazing when this is like hooked up to like actually be able to modify the strategy and analyze our logs, which we're currently working on that right now. We're hoping to have that launched very soon. But in the future, we'll be able to say, okay, make this change. And it'll actually just change it for us and then run it for us, right? Okay, it says, I've reviewed the code. The strategy appears to have several mechanisms in place to handle selling prevented unintentional trades, time-based exit, checks how long position, held days, okay, take profit, expiration, VIX filter, and market orders for exits, preventing duplicate buys. And the VIX is actually quite high right now, so it should have actually exited everything. Yeah, we're at a VIX of 19.88. For those of you that don't know what the VIX is, this is actually a very important thing to be looking at, especially in today's markets. We see that the VIX is actually spiking right now. If you look at the past 5 years, we're actually at a higher point in the VIX. So what is the VIX? We basically say the VIX is a volatility index. It is the fear gauge. When things start going bad, the VIX starts to go up. It's actually a good way to make money if the market's going down, which I'm starting to think maybe we should have. I've been thinking the stock market's actually going down the past week or so. I'm starting to think maybe we might be entering into a bit of a correction territory. So I'm wondering whether we can make a strategy that takes advantage of that. I think that'd actually be very cool to build something like that today. But you can see here the VIX is up at 19.88, which I think would actually trigger. Okay, set to 21. So we haven't crossed 21 VIX yet, but we're very fast approaching it. And when the VIX hits, it should actually sell everything. It should exit all positions. So we'll see if it's able to do that as well. Okay, and preventing duplicate buys says weekday check. The strategy only attempts to buy new options on Thursdays. Simultaneous position exits. It respects the max simultaneous. Okay, good. And then weekly trade lock. Last traded. Okay, it has all that. And then error handling. Forget quotes. Okay. And there's a suggestion. It says forget chain and get quote. While there's some error handling, ensure that failures on fetching option chains or quotes are robustly managed. If these calls fail, the strategy might. Okay. All right. So let's take a look at what this other AI did. Looks like it generated our new strategy here, version 14, and we see what it fixed. So it says, fix the core exit bug by iterating exits over live broker positions, not just internal trades dictionary. Good. I think that's a very good idea for it to do that. So positions are never lost after restarts or failed order submissions. Corrected logic to only remove a trade from tracking when a sell to close order is successfully submitted, ensuring entries or retries on subsequent iterations if submission fails. Added robust fallbacks for missing entry date time, including position.create date time, okay, and comprehensive per position diagnostics, held trades, DTE. Okay, good. So this actually looks like it's going to do what we want to do. Let's run a quick back test. I'm going to do a very short back test just to see whether everything is still working correctly. We're going to go from August till today. We'll run this. We'll run a back test. And let's see how this thing does in a back test or past a little bit. We're actually working a lot of, we're doing some pretty big improvements to our back testing mechanisms as well. If you guys have gone to our website recently, you'll see that we now have partnered up with Theta Data, which has actually been providing data for all of our back testing. And it is quite a bit better. It's quite a bit easier to run back tests now. So if you guys haven't been to our platform for a little bit, this is actually a very good time to come in. We have brand new integrations with Theta Data. We've worked on improving our back testing speed and all those types of things. We're still working on speeding up even further, but we've really substantially sped up our back tests. There's some people that are saying they were back testing over a couple hours. We're able to reduce that down to minutes. We're going to get it even lower. We want to really speed up back testing a lot. All right. And we're adding in this AI. We're going to have this brand new AI. So if you guys join our platform right now, this is the best time to join. We're getting all these amazing new features in here. And hopefully next week, I'll be able to demo this to you guys. If you guys have joined our YouTube and you're subscribed, next week, what we're going to be doing is I'm going to be using this brand new AI to actually analyze everything and modify things. So it's going to be really, really cool to see that. Okay, and yeah, look at this. The VIX just keeps climbing. I think we're going to hit that 21 VIX. And I think it's going to shut down our algorithm, which is probably a good idea. I would actually think, if we're trading options right now just seems like a very dangerous time to be owning call options. I've actually been redistributing some of my portfolio where, a lot of these names, especially the big AI names, have been really kicked hard over the past week. For those of you that, might have been investing in Palantir or Tempest or any of these other AI stocks, they really got hammered very hard over the past week. This mechanism for this strategy is when the VIX goes over 21, which it might actually hit today. When it's over 21, it actually just takes a step back. It says, I'm not trading call options right now, which is, I think, a very good idea. Okay, cool. So we got this back test starting up. Very cool. It's downloading all this data. Perfect. All right. So what I'm going to do is I'm going to stop our other version of this bot because it clearly has a bug in it. So I'm going to stop it, this weekly momentum strategy. Let's stop the bot. Okay, there we go. It's stopping. And then I'm going to go into this account, which for some reason has no orders and no activity in it. I wonder if we're on the right one. Let me find. I have a bunch of accounts here. There it is. Okay, and I'm going to manually close these positions. Okay, there we go. We sell that, and I'm also going to sell this HIMS position. So we bring our account back to. We want to bring our account back to normal. There we go. Okay, so we have a clean account here. All right, we have our brand new version of our bot. The back test is running now. Let's see what happens. So I want to do this little smoke test to make sure that it actually is still working correctly. So we want to do that. And then I'm going to run this new version on my account, and we're going to see if this thing is able to actually sell things correctly this time. All right, the back test is running. Let's give it a little bit more time to get all this done here. And he has to download quite a bit of options data, so we're letting it do that. Okay, and then I'm going to close this down. I think we're good to go. So while this is running, why don't we have a conversation, guys? We have a couple of you here watching live. What would you invest in thinking that we might have a stock market correction? What would you guys do? Actually, why don't we pose that to AI? I'm going to bring this up. Can you please do some research on the internet? Search, Reddit and other forums like that. What do other people find to be successful in corrections or bear markets, right? So if I'm thinking that the stock market's going to go through a little bit of a correction, what would be something good for me to buy that also won't burn me if I'm wrong, right? If we're wrong about that, okay, what kind of strategy should we invest in? Obviously, you could buy put options. That's one thing. You could buy inverse ETFs. That's another one. But what's something that doesn't just completely blow up if the stock market turns up and actually goes the opposite direction? What can we do in something like that? All right, we're going to go and have ChatGPT do a little bit of research around this. Okay. Okay, so one is increase allocation to cash or short duration bonds. That makes sense, but it's not really going to make us money, right? And then maintain or shift towards quality or defensive equities. Again, not really going to make us money. So let me qualify this a bit more. So let me qualify this a little bit more. I don't want to just be defensive. I want to actually make money when the stock market goes down. I don't want to just buy defensive things. I want to actually profit from a downturn, not just be defensive and hold cash or something like that. But at the same time, I don't want this thing to completely explode if the market actually ends up going up. What kind of strategy would you recommend there? Yeah, exactly. There you go. So put spreads, not raw puts. Interesting. So defined risk bearish exposure. This actually sounds like a pretty good idea, right? So it's not just simply buying put options, because that's what I've done in the past. If you guys trade options, put options are the ones that actually make you money on the way down. So if the stock market falls, a put option is going to make you some money. But the problem with buying put options, though, is that they could be kind of expensive. It could be expensive to hold on to these things. So this actually makes a lot of sense. It's a put spread where you buy one put and you sell another one. So it's actually a lot cheaper to do this. And I think this is actually a very interesting idea. Yeah, and professional volatility desks because they allow upside and corrections, but limited downside if the market goes up. Okay. Why is match your criteria? This is the only bearish tools where the wrong side risk is capped at a tiny fixed cost, and you still get real profit if the market dips. Perfect. And there's a collar, which is effectively a hedged bearish bet that still lets you recover if markets go up. So I think this is the opposite of an iron condor, right? Own something plus put spread plus covered call. That's actually kind of interesting. So you own something and then you get a put spread as well, and you also get a covered call on it to generate income. That's actually very interesting. Then there's low volatility via deep out of the money calendar spreads or ratio spreads. So if you want to go long volatility, that's another really interesting one. So basically, if the VIX goes up, we make a bunch of money, is what that is about. Oh, and by the way, our back test finished. Look at that. Our annual return, 717%. That is quite crazy. It's a short back test, so that kind of makes sense. Awesome. I think this strategy is good to go. I'm going to start trading this thing. I'm going to trade this on the Tradier broker. There goes Tradier. And then I just want to make sure that this is the right account. 6YA 2014. Is this the right one? No, it is not the correct one. I'm on 55691. So what I'm going to need to do is I'm going to need to move this off screen for a quick second, guys, because I'm going to need to get our account number and access token set up on Tradier. So I'm going to go into my account here, account settings, and then I'm going to grab the account that we're on, which is 55619. There you go. So I'm going to put that in here. And then I'm also going to grab our API key. So API access. I'm going to grab this key here. Boom. I'm going to stick it in here. There we go. Good. And then I'm going to hit, let me show you what I'm doing here. Now that I've moved over the sensitive stuff, I set the account number to the correct one. I set my access token to be what it's supposed to be. If you guys want to see how that actually works, here it is. There's our access token right inside of trade here. So you guys can actually set that up. And I'm going to hit deploy. There we go. Deploy. Perfect. All right. This bot is starting up. Hopefully this time around, it doesn't make that mistake where it just doesn't sell. Okay. And we're going to watch this thing start up, and hopefully we'll see it actually places buy order, and we can call things done with this bot. And then we'll see, does it actually, yeah, look at this, we're really close to that 21 VIX. We're very, very close to 21. So we might actually have this thing not even trade at all, right? I have a feeling it might even sell by the end of the day because of this. I'm just wondering, I want to actually ask another question. For the PDT rule, how many round trips are you allowed to make? I feel like I should convert this from a regular account, from a margin account to just a cash account. If you guys don't know what the PDT rule is, the PDT rule is the pattern day trading rule. So what I'm actually asking about here is how many times can I trade back and forth? There's 3 round trip trades and a rolling 5 business day period on a margin account. Okay. So what I'm checking here is if this thing actually buys these options, is it later than going to sell them? Because if the VIX actually does hit that boundary of 21, which is looking like it's probably going to hit very shortly, then it's going to buy and then sell again, which a lot of brokers frown upon. Right? They don't like it when you buy and then sell. Okay, deployment failed. There's actually an issue here. Your trading bond account issue and stopped. What happened? Let me look into this. Unauthorized account. Interesting. So it looks like I didn't copy over my account number correctly, which is kind of strange. It's saying the access token or my account number is invalid. So let me try doing this again. It seems like maybe I copied things over incorrectly. So let me try this again. And move this off screen one more time. I may have copied something incorrectly or missed what, or copied the wrong thing. So let me go into here. We're on this account, API access. Okay. That looks, oh, because I had it switched to paper. That's why, guys. That's a silly mistake. This is not a paper account. This is a live account that we're trading. So we need to set it to live. So I switched this, set the switch to live trading. There we go. And then I'm going to accept the terms and conditions. I'm going to deploy again. That's my mistake. Silly mistake. All right. So we're running this thing again here, and we'll see this thing hopefully actually place these trades. But again, the VIX is, we're really looking like we might be entering into some sort of correction or bear market. Let's take a look at the QQQ. I'm just curious where we're at right now. Yeah, we're down over 2% for the day, guys. Look at this. This is a brutal day in the markets. So let's take a look at what's happened here. We seem to have hit a peak. Okay, we hit a peak in the market at $635.77. Okay, and I'm going to do a little bit of math here. So I'm going to get my calendar out on my phone. We started off at a high of 635 and 77 cents, and we're currently at 607.45. So divide that by 635 and 77 cents. So we're down, guys, almost 4.5% off the peak. Correction is defined as, I believe, a 10% drop. So we're halfway towards officially calling this a correction. So that is definitely, we're definitely in some down territory here. So the question is, what do we want to trade in that scenario, right? Do we want to even be holding call options, right? This strategy, I actually really like this strategy because if the VIX is too high, it just sells everything and sits on the sidelines, which I think is actually a great strategy here. Because if the VIX hits that 21, I don't think we should be buying calls. I actually agree with that. At a 21 VIX, I think exiting out of calls makes a lot of sense. Makes me think about my discretionary portfolio where I trade with like manually as well. I kind of thinking about exiting out of some call options there. But what we should do, and let's take a look at this strategy. I just want to make sure this actually runs now and executes correctly. I'm going to view the logs, see if we still had that issue from before or still have the same issue where it said my API key was wrong. Let's take a look at that. Okay, no logs yet. Looks like it's still starting up. Still starting up. Okay. Where are we at? View this performance. Yeah, it's still getting account information. Okay, so while that's running, let's give this a little bit more time. It's going to take a few seconds to actually run this bot. Let's talk about what we want to do. Like, I'm actually thinking about making a strategy that will benefit off of this downturn, right? What can we do to actually make money on the way down? If we do go through a correction, which looks like we're halfway there, what's going to make us some money? So I really like this idea of the put spreads. I'm thinking we could do a put spread along with some sort of ETF on the side, right? We could own like a QQQ or a TQQQ, something like that, and then have put spreads that are rolling or something like that. I think that'd be pretty damn cool. There's also long volatility via deep out of the money calendar spreads. There's another option here. Trend following managed futures ETFs. Okay, managed futures replication ETF. Yes, I've seen these before. Let's actually take a look at some of these ETFs I was talking about that could potentially make money in a downturn. Okay, so here's managed futures strategy ETF. This one's actually down today. I would have expected if this is an ETF that's supposed to make money in a downturn, it should be up today. For some reason, it's not up. So for that reason, I'm already against it. Let's take a look at another one. The next one here, KMLM. This one's also down today, but it's not down too much. So sure. But really not doing very well over a long-term basis. Even when we had that big drop earlier this year, let's see how it did in that time period. Because around March, we had this big drop. So it actually did make money in March. Look at that. It did have a nice big jump, but it's been mostly on the downtrend. I don't know if I'm too crazy about this one either. Let's take a look at this one. It's really hard to make money on the way down. I've always noticed that. If you guys have any good strategies that make money when the stock market falls, I'd be very interested to learn about what you guys are doing. Here's what is this ETF? This actually looks kind of interesting. Return stacked US stocks and managed futures ETF. What does that mean exactly? Let's actually research what this thing does. RSST. Return stacked US stocks and managed futures. RSST. Where's the description? I don't see a description of what it does. Okay, the fund is an actively managed exchange-traded fund that seeks to achieve its investment objective by investing in two complementary investment strategies, a U.S. equity strategy and a managed future strategy. Under normal circumstances, the fund will invest 80% of its net assets plus borrowings from investments purposes. Okay, more. Let's read more about this. What is this managed futures thing? What does it talk about? Managed futures, how? Right? In U.S. equity strategy and B, the managed future strategy, the fund is non-diversified. Okay, but it doesn't really explain what it does with these managed futures. What kind of managed futures are we talking about here? Right? There's really not a lot of description about that. Let's see. Is there there we go. Here's a return stacked. Why invest in RSST ETF? For every $1 invested, RSST is designed to provide $1 of large cap US equity exposure and $1 of a managed futures strategy. Okay. What is that managed futures strategy though? Da-da-da. Diversification, inflation, hedging with the ability to go both long and short global futures markets, including equities. Managed futures has historically exhibited inflation hedging characteristics. Okay, so it's meant to hedge against inflation. And two complementary investment strategies, a U.S. equity for every da-da-da. Okay. As capture total return, okay. The managed futures strategy will invest in a trend following strategy in futures contracts among 4 asset classes: commodities, currencies, equities, and fixed income. That's actually very interesting. It's a trend following strategy. We're actually, by the way, we're adding in futures into our platform. So I think maybe next week we can actually work on a future strategy as well, which I think would be pretty damn cool to see a future strategy running. We have futures actually almost fully working on our platform now. So it'd be really cool to see that. You lose all, okay. Yeah, so understand that. Okay, great. Let's take a look at our strategy. Is this thing running yet? Okay, looks like it's running, and it purchased. Okay, so purchased CCJ and HIMS. There we go. Those are the 2 stocks or 2 options that's supposed to own. Great. And then let's take a look at where we're at with the VIX. Where's our VIX here? VIX is over 21 now. Officially over 21. So if it stays that way, it's actually going to sell these quite soon. So we'll see. I don't know if it's going to check again tomorrow. Let's actually ask the AI. So how often does it do this check for the VIX? Is this something that gets checked daily or several times a day? Because the market actually just crossed 21 for the VIX. We're officially above 21, and it has not sold anything yet. So how does that VIX check actually work? Okay, the VIX check is performed on each trading iteration, which is run once daily. Okay, so tomorrow, presumably, if the VIX is still above tomorrow, then it's going to do this sell. It's called an on trading iteration. If the VIX is above, the strategy will log that the VIX is active, force exits on any open positions, and skip any new entries. Trading will resume normally once the VIX drops back below the threshold. So if the VIX is still above 21 tomorrow, which it's above today, then it's going to actually exit these positions, right? So in terms of round trips, I just want to make sure that here, so how does this PDT work? So it's basically 3 is fine, but 4 gets my account suspended. Is that what happens? Okay, you're allowed 3 day trades in any rolling window. Okay. So is it still considered a day trade if I bought the securities today and then they get sold tomorrow? Or is that fine? Is that not counted under the PDT rule? Okay, so buying today and selling tomorrow is not considered a day trade. Okay, so we're actually fine here. So I don't have to worry about this. So we bought CCJ and HIMS. We own that right now today. And then tomorrow, if the VIX is still above 21, it should sell this and exit out of these positions, which I think is actually a very good idea because, like I said, we're entering into that correction territory. Okay, great, perfect. Okay, so we got our strategy running. Now let's talk about our next strategy. I want to take a look at the strategy here where what we can do is actually make money on the downturn. So we have this here where I think what would make sense, like what I would like to do is I would like to, and I've actually thought about a strategy like this for a while now, um, where we can own a leveraged asset, something that does very well. So I'm thinking about a strategy that I think this will work very well in a market downturn. This is what I think, right? And again, not investment advice, but what I think would work well is if we own TQQQ, which is a very well performing asset in most situations, but does not do very well on downturns. And then we add on a put spread, right? So make a strategy that owns TQQQ in most situations. Actually, no, only owns TQQQ if it's above the 200-day moving average. Okay. If we're below the 200-day moving average, or actually, no, let's do this. I'm gonna combine two of our strategies. One of my favorite strategies is owning TQQQ if we're above the 200-day moving average. I like that by itself. But what we could also do is have this thing always own a put spread, right? Some sort of put spread that's just constantly rolling and owning, right? Let's actually ask ChatGPT about this. So I like the idea of a put spread. Can you do a bit of research around what has historically been the best own over the past few years? Like actually research this, take your time looking through this and researching this because this is something that's actually a bit complex. What kind of put spread should we own, and what would have historically been the best type of put spread to own over the past 10 or 20 or 30 years? Because when we own a put spread, we got to think about what expiration date we're buying, and then we got to think about what strike prices we're buying. So what would you do, right? What do you think is the best or most effective put spread for us in terms of expiration dates? Should it be a month out, expiring in a month, or expiring in 2 months, expiring in a year, or expiring in a week, and rolling weekly? How should we do that? Because I'm thinking my default thought process is we want to own something for probably buy something that is a month out and then only hold it for a little bit of time, and then roll it once every week or once every 2 weeks or something like that. That's what I would think. But what does the research actually say? And then also what strike prices, right? Like I guess we could talk about, what level of delta and all that kind of stuff do we want to put this spread on? Okay, so it's doing a little bit of research for us here. It's great. Okay, this is good. ChatGPT is actually doing some pretty good research for us here. So what I'm going to do is I'm going to take the research that ChatGPT did, and then I'm going to put that into a strategy. And I think we can create a strategy where we own TQQQ, but only own it if it's above the 200-day moving average, and then also always own put spreads, right? So we'll leave like some percentage of the account and put spreads on a regular basis. I guess that's the other thing we should think about is what percentage of the account do we want to put into put spreads as well, right? Because that's another thing that we want to consider. So let me start telling our AI what to do here. We'll say, make a strategy that uses 90% of the account to buy TQQQ, but only when it's above the 200-day moving average. If TQQQ is below the 200-day moving average, then we should not own it, right? So it should buy or sell TQQQ based on the 200-day moving average. Then what I want you to do is I want you to take, let's say about 7% of the account and constantly roll. Actually, not even, I think 7% is probably too much, right? I think we probably should use a smaller amount. It kind of also makes it so we're going to have a bigger account size for this, but let's try it out. Let's see what happens. We can play around with this a little bit. This research is still coming back here. Then please use 5% of the account to buy a put spread that is described like this below. Right, and this is still doing it. You might have to sell some of the TQQQ in order to buy the put spread. Right, so basically we're going to have 90% of our money inside of TQQQ on a regular basis, but only if it's above the 200-day moving average. And then we're going to take 5% of the account and buy this put spread so we actually make money on the way down. I think that's going to be really interesting. So we own TQQQ only for above the 200-day moving average. And then if and we use that with we do that with the 200-day. Yeah, we do 90. Okay, so we use 90% of the account to buy TQQQ, but only if it's above the 200-day moving average. And then we're going to take 5% of our account and we're going to put into a put spread that's going to be rolling on a regular basis. So that will make us money. So TQQQ should make us a lot of money when the stock market's going up. It's one of the best, like it's an incredible ETF. I don't know if you guys have ever seen TQQQ. This is why I love this thing. By the way, TQQQ is incredible. If you look over a long time period, it's up 24,000% since it started. That's crazy. Like this is like getting into like Nvidia or Amazon territory, and you don't have to pick the stock, right? You just pick the whole index, right? The problem with TQQQ is that it does get hit pretty hard in downturns. So when things fall, it does get hit pretty hard. That's why we do this 200-day moving average. That protects you against a lot of that, right? Or at least historically has protected against something like that. Again, not financial advice here. But if we own TQQQ, we can make a lot of money on the way up. And then if we hit below the 200-day moving average, we exit so that we prevent big losses with that. And then on top of that, now we're going to own this put spread that could potentially even make us money on the way down, which I think is pretty damn interesting. Okay. Now let's take a look at what the research came up with here. It did a lot of research for us. Okay. There isn't a single best put spread that dominates over 10 to 30 years, but the research does give us some pretty clear guidance on maturity, delta, and how often to roll. Okay, what the research says versus vibes. Studies on options, overlay, and tail hedging. A big 2020 Monash paper looked at a huge grid. Okay. Key findings that matter to you when buying puts outright for downside protection, longer maturities, over 6 months, up to a year, had better risk adjusted performance than short dated stuff. Really interesting. Okay, so we probably want to have longer dated puts. That actually kind of makes it a little bit easier because we don't have to trade so often. I actually like that idea. Best results were at the money or slightly out of the money puts, 85 to 100% of spot, so 0 to 15% out of the money. When they tried to cheapen the hedge using put spreads or put ratios, those underperformed simply buying the put on their main. Okay, so it actually says that they just bought puts. They did not buy spreads. but within the spread family, shorter put maturities did better than long ones. For pure hedging, long dated, near at the money single puts were best. Okay. If you insist on spreads, the better ones are around. Okay. Classic 1 month hedge, your instinct. Okay. Buy protection. It's simple, but historically expensive. Okay. So maybe we just buy puts. Maybe we don't buy the spreads. That's what it seems like. That's actually a lot simpler as well. Okay. So let's see where to take this next. Define the choices. Okay, so what is your recommendation? What should I be doing? What do you think is the best option for me? I think we should be buying puts with a 1 year maturity. Okay, here's the clearest. Okay, they want to profit the most research supported structure, a 60 to 90 day slightly out of the money vertical put spread rolled monthly. What? What are you talking about? I thought you just told me that owning single puts and not the spread was the best thing. Why are you now all of a sudden advocating for puts spreads again? And I thought you said it should be 6 months to a year expiration. So why are you all of a sudden saying 60 to 90 days? I don't understand why you're going against what you told me the research was. Yeah, because it literally told me here, right? It's saying the research that it did, classic 1 month, okay, hedge, what the research actually says, study on option, right? Tail hedging, right? Pure, long dated, near at the money single puts were the best. So it said that and then it contradicted itself. So I'm trying to understand. Yeah, you're fair to call it out. That does sound like it contradicted myself. Let me untangle it properly. You're right. There are two separate things I talked about and I blurred them together. What the research actually says, clean version. From long-term academic institutional research on hedging and equity portfolio, if your goal is to minimize drawdowns and improve risk-adjusted returns over decades, then the studies tend to find that single long puts, not spreads, with longer maturities, yeah, exactly, often around 6 to 12 months, strikes around at the money to slightly out of the money, have historically given better risk-adjusted protection than put spreads, collars, or constantly rolling short-dated out of the money options. Yeah, okay, exactly. Right. So if your question was the most effective pure hedge historically for a stock index, yeah, that's exactly what I want. What you asked for, which is not the same as pure hedging, you don't want to be defensive. You want profit from a downturn, but you don't want to get burned badly. Okay, then you're explicitly talking about put spreads. Oh, I see. Okay, so it's actually saying two different things here. I understand. So what we want is we actually want it to hedge, right? So if we're going to own TQQQ on a regular basis, then we would probably want to own puts to hedge that position that should make us some money on the way down. Whereas the phrasing that I was saying was like, oh, we just want to make money on the way down. So I guess it depends, right? Like, do we want a strategy that is hedging and we're protecting ourselves, or do we want to have something that's like actually going to make money? So I guess that's the difference here. I would say I would prefer to do this, right? Okay, so I wouldn't buy the put spread, right? Buy puts to buy the puts. Okay. So and then if we have long dated puts, I wonder how we should be doing this. So it's saying 0 to 15% out of the money. Okay, so let's say strikes around. Okay, so let's say strikes around at the money to slightly out of the money, say 0 to 15% out of the money. And then longer maturities, often around 6 to 12 months. That's what we want. Right? Okay, so we have a strategy here. This is what we want to build. It's going to own TQQQ if we're above the 200-day moving average. We're going to use 90% of the account for that. And then we're going to use the other 5% of the account. So we're going to have a little bit of cash sitting around, which, maybe we don't need to do that. Maybe we'll go 7%. We'll have a little bit of a cash buffer. just in case, because you kind of want a little bit of cash for trading. It makes things a little bit easier to trade if you leave a little bit of cash around. If I've found that, right? And then it's going to use 7% of the account to buy puts that is described like this below. You might have to sell some TQQQ in order to buy the puts. If you don't have enough cash, or if the ratio is off, right? And then strikes around at the money. And then we also need to say buy SPY puts. So the reason why I'm saying SPY puts, we could also say puts on QQQ. Maybe that would be better. I'm not sure. Maybe let's buy QQQ puts. So because we're buying TQQQ, that's a triple leveraged NASDAQ on the way up. And then we buy puts on the QQQ, which is also a NASDAQ. So they're related to each other, and they're kind of straddling that. I was going to say SPY because SPY options are very, very liquid, but I think we'll be fine buying the QQQ puts. Okay, let's generate this. Go ahead. Let's see the AI actually build this out, and we'll see what happens. I'm actually quite curious to see what happens with this. And we'll give the AI, it usually takes about a minute or two to generate a strategy. So we'll let that happen, and then we'll be able to run a back test. We're actually a little bit over our 1 hour mark here, but I'm just curious. I don't know if you guys are curious. I'm very curious to see how this strategy works out, because this is a strategy that I've actually thought about for quite some time. Having this kind of strategy where you own a leveraged position, right? So you make a lot of money on the way up using leverage, and then you have a put option that's kind of cutting off the bottom, right? So if things go really bad, it like protects you, right? I think that would be a pretty interesting thing to do. Okay, so let's see how this does, and we can actually even compare this to our regular strategy that simply buys a 200-day moving average, and that's it, right? Or buys TQQQ if it's above the 200-day moving average. All right, so let's see if that is the case here, right? I wonder if it's going to outperform that strategy or not. All right, we're going to give it a few more seconds here, and we'll see what it generates. I'm actually very curious to see what it makes, and then how it performs. And I think this back test will probably take a little bit of time to run, but we'll see how this actually does. What do you guys think? What do you guys think about a strategy like this, right? Where we buy TQQQ, but only if it's above the 200-day moving average. And then we also own some put options as well. What do you guys think about this? Do you think this will do well? Have you guys ever tried trading anything like this before? Let me know. You could type it into the comments. You could type it into the chat. Let me know. Have you ever traded a strategy that owns put options on a regular basis? I'm really wondering whether you guys have ever done this before. So put it in the comments, put it in the chat. Have you ever owned put options long term on SPY or QQQ to hedge your portfolio? Is that something that you've ever done? Because what we're doing here is we're buying put options on QQQ that are slightly out of the money with a 6 to 12 month maturity, right? Have you guys ever tried a strategy like that to hedge your portfolio? I feel like that would be a pretty interesting thing to do. Let's see if this works, right? Okay, so here's the strategy. The strategy aims to ride the long-term uptrend of the NASDAQ 100 via TQQQ while carrying a steady layer of portfolio insurance with QQQ put options. It allocates up to 90% of the account to TQQQ when the price is above the 200-day moving average, and exits entirely when the price falls below that average. Separately, it maintains a 7% allocation to longer-dated QQQ puts to help cushion sharp declines. So the strategy works by monitoring these key conditions. TQQQ price must be above the 200-day moving average. The hedge uses QQQ puts when the expirations are around 6 to 12 months and strikes at the money to about 15% out of the money. It buys TQQQ toward the 90% margin. Okay, very cool. So let's hit this back test. I'm going to run this back test. We'll see what happened. What would have happened over the past year. It is actually a very good back testing time period for us to run it over, because this year has actually been quite good, because we've seen really big ups and really big downs, right? So let's see how it plays with both of those, right? How are we doing in the ups and in the downs? And it's going to take a little bit of time to back test. It has to load up the data. Usually the data loading part takes the longest, and we're actually working on speeding that up. We're going to have much faster back tests. Hopefully within the next 2 to 3 weeks, we'll have really, really fast back tests. Okay, cool. So we'll let this thing back test. We're a little bit over our time, so I think maybe we could push this till next week. We can keep working on the strategy next week. I think this is a very interesting one to build out, because this is something that could potentially make a lot of money in a downturn, right? And I think if we're going to be getting into a downturn, right, then this could be something that's very, very valuable and potentially can make a lot of money in this process, both up and down. So I'm very interested to see what the back test is like. If you guys want to see what happens to this strategy, is this a good strategy or not, tune in next week and we'll share with you all the back test results and share with you guys the strategy. We'll see if this thing is actually a good one or not. All right. Either way, it's been a pleasure, guys. See you next week. And I hope you all have a great day. And I hope you have a great week in trading. I hope you guys make tons of money and are very successful with your trades over the next week. All right. Thank you very much, guys. Have a good one. It's been a pleasure.